It's my great pleasure to have the opportunity to discuss the issue of decentralized finance, or DeFi, and its many aspects with François Villeroy de Galhau, the governor of the Banque de France. I've had the opportunity to work with the governor on many occasions, often at the bi-monthly international central bank meetings at the Bank for International Settlements, where he currently is the chairman of the board of directors. I've always found him to be very knowledgeable and insightful. And I can confirm from my own experience that he's also a very good negotiator when we hammered out the final consensus on Basel III a number of years ago. Governor, welcome.
Thank you very much, Bill. And thank you for these very kind words and these very kind memories. I remember you were not directly in charge of Basel III, but we had to negotiate instead the design of the output flow. I also remember our many discussions in Basel, in our dinners, etc., about financial stability, monetary policy. I miss these discussions, Bill, but it's a pleasure to be with you again today.
So thank you so much. So let's start with your views on what we need to do on the regulatory side. You gave a speech recently at the conference on opportunities and challenges of the tokenization of finance. You stated the need for the Financial Stability Board to create a coherent regulatory framework to work across countries. So how do you assess the situation from the perspective of France, of Europe, and the Bank for International Settlements itself? Do you think there is also I want to ask you, do you think there's an important role for the BIS in ensuring interoperability to facilitate timely cross-border settlements?
Let me first say that I still think that crypto assets and digital innovation and tokenization have a bright future. There could be the idea after the so-called crypto winter that it's the end of the story or a partial end. I don't think so, especially for so-called stable coins. There is some ambiguity in this expression because some so-called stable coins are not that stable. But the innovation part of it and the technology with the use of DLT, etc., remains very promising, which means that for this innovation to inspire trust in the long run, we need regulation. And this is a very important message from the FSB, Financial Stability Board, and from the FSB. By the way, we had our G20 meeting in October in Washington, and we reaffirmed strongly our commitment to implement regulation. If I may, I won't quote a G20 communique, it would be very boring. But in the paragraph 13, let me only stress this expression, that the G20 is closely monitoring and wishes that so-called stable coins and the crypto assets ecosystem are subject to robust regulation, supervision, and oversight to mitigate potential risk to financial stability. And we agree on all the principles. That said, we should implement this common principle in each jurisdiction. And this is where we are not yet completely. As you asked a question about France and Europe, in Europe, we adopted a so-called MiCA regulation, MiCA meaning markets in crypto assets. So it will create a framework which will foster innovation while inspiring confidence. And I think we need both of them. So my strong wish after this G20 common communique is that now all jurisdictions, including the most important ones, take the same pace because crypto assets by definition and tokenization is global. And so if we have regulation, be they the best one, in only some jurisdictions, it won't be efficient. We know what we have to do, we agree on what we have to do, so let us deliver. This would be my call today.
I completely agree with that. I mean, we think at the Bretton Woods Committee that the technology has a tremendous amount of promise, but we need guardrails because if we don't have guardrails, we're going to have a lot of problems, as we've seen over the last 6 months. And those problems will erode trust in what could be a very important emerging technology. In the same speech, you asserted that a retail central bank digital currency could act as an anchor for the digital world. So what role do you think that central bankers should play in this new regime? And how does a CBDC fit into that vision? What do you think the central bankers need in terms of authority, expertise, and resources that they don't have today? And could you give us an insight into, what do you think the attributes and applications of this CBDC might look like?
So this is another very important point. Allow me perhaps, Bill, a general remark as a prerequisite. It's tempting to think that you have on one side regulation and on the other side innovation. And you have on one side public institutions like central banks, and on the other side private firms like big techs or fintechs or crypto players. And so central banks should be only on the side of regulation, and private players should be only on the side of innovation. I think the future is much more mixed. And for example, any innovation should associate public and private players. And we as central banks should be obviously on the regulation side. This was my previous answer. But we should also take part in the innovation. This is where CBDC is a very interesting example. It's a question of public choice. So it's not yet decided, even in the UR. We will probably come back to that. But what is the idea? If we look at cash and means of payments, there is a very long tradition of public-private partnership. For cash, you have banknotes, which is central bank money, and you have commercial money with your deposits and your credit card in your commercial bank. And our fellow citizens use both of them. I don't know if they make the difference. But if you think of digitalization, the banknote use will diminish. Perhaps in some countries even disappear. We see it more in Asia or in Northern Europe. Does it mean that our fellow citizens should lose access, direct access to central bank money? This is a very heavy democratic or public choice question, as said. So this is one of the reasons why we should study if a central bank digital currency is possible. There is also an issue of sovereignty for the US, European, Asian authorities. Do we completely leave the ground of tokenization only for private players, or do we also issue a digital money? So there are very good reasons to put the question on the table. There are also reasons, Bill, to be fair, to be a bit cautious on the issue, because it raises many questions which are not mainly technical, probably. If I look at what we study at the ECB, there is a question of partnership with private banks. We will not build CBDC against banks. And I know that some of them fear CBDC, saying you will kill commercial bank money, which I mentioned earlier, our deposits. It's not at all the case. It should be an intermediated scheme. To give an obvious example, I don't wish, as Banque de France, to open accounts for private citizens in the central bank. We suppressed them 20 years ago. It's not to restart. So CBDC accounts should be in commercial banks. Then you have question about the practical use by merchants, by citizens. Is it attractive? What is the regime of tarification? How do we protect private data? All these questions can find an answer, but this is why we run according to a prototype. But I really think, and I say to commercial banks or to public voices who ask while we look at the question, that it's part of our mission to put the question of accessibility of central bank money for citizens, or to put the question of sovereignty of issuing money. So it's a necessary question. It's not yet a pre-done deal for the answers. I would put it this way.
So at this point, are you more leaning towards a wholesale CBDC or a retail?
No, you are right, Bill. There are probably two sides of the mountain. And all public attention, if you look at the political debate or in media, is focused on the sunny side, probably, which is retail. I don't say it's the easier side because, as said, it raises many questions. But we shouldn't forget the side of the mountain which is less exposed to the sun, which is wholesale or interbank central bank digital currency, which should be used for settlements through market infrastructures. And here, as I said, there is probably less appeal. Everybody can think of e-bank note, it's very seductive, it's more or less finance fiction. So everybody can understand, but there are many questions. But the tokenization of finance will for sure induce a development of tokenized securities and settlements. And as you know, because the New York Fed was the cornerstone of the global system regarding markets, the practice for decades has been that central bank money is the foundation, really the basis for these settlements in market infrastructure. If you have tokenization of these settlements and we don't have a central bank digital currency, then the role of central bank money would decline or even disappear in all this market infrastructure. And this would be a huge change. Not for the better, I would guess. It would mean less financial stability. So, to put it in a nutshell, the business case for wholesale is probably still stronger than for retail and still clearer. It refers, as I said, to the tokenization of finance and securities and settlements. And it refers also to another use case, which is cross-border settlements and interoperability. Let us imagine, Bill, that several jurisdictions develop CBDCs. I don't know exactly which jurisdictions, but it could be China, we know. It could be the ECB. It could be many jurisdictions around the world. Perhaps also the US, the question is still open. It will be very important that these CBDC are interoperable, because if not, it will be a regression on cross-border payments. If yes, it could be a progress on cross-border payments, which is far from perfect today. And if we have to ensure interoperability of this retail CBDC, we need a wholesale CBDC. So this is a second and clear business case. This is why at the Banque de France, we strongly believe in wholesale CBDC and we run some experiments on that.
So the Bank for International Settlements has international settlements in its name. Do you see the BIS as being important in terms of ensuring this interoperability across different jurisdictions?
The BIS at this stage is fostering innovation. You are probably aware that we at the BIS created some years ago, thanks also to the strategy implemented by the staff and the general manager, Agustin Carstens, we introduced a so-called BIS Innovation Hub. It's a hub, so it's not only centered in Basel and in Switzerland. There are many innovation centers in Asia, in North America, and in Europe. By the way, Paris and Frankfurt welcome the Eurosystem BIS Innovation Hub. And CBDC is a very important part of this hub. We also work together on cross-borders. To give you an example, we at the Banque de France work with the National Swiss Bank and with the Monetary Authority of Singapore on a cross-border experiment. So we are not yet at the stage where we would say we have an international settlement system based on a single wholesale CBDC. I don't think, by the way, that it will happen this way because CBDC remains issued by a central bank and we don't have a global central bank. But BIS has a key role in fostering innovation at this stage and probably in the future, helping interoperability.
That would be great because obviously one of the best use cases for blockchain technology is probably on cross-border payments because cross-border payments are extremely inefficient at this point as they go through the hands of multiple intermediaries. So you already mentioned the Banque de France's experiments. So can you talk a little bit about what these experiments are and what progress you're making and what you're learning from the experiments that you're undertaking in CBDCs and how they interact with what's going on in the fintech sector?
No, we started as early as 2020. And in CBDC history, it's already long history, 2020. And we have around 9 experiments on wholesale CBDC. I should be precise, Bill, that we run in parallel to the ECB own prototype investigation phase, as we say, on retail CBDC. And this is how we share our work. And as it was successful and very interesting, we decided last month to launch 3 additional experiments. 2 of them are on these cross-border settlements. And we run these experiments not on a standalone basis, it wouldn't make sense, but with other central banks. I quoted Swiss National Bank or MAS in Singapore. And yes, with private commercial banks and with fintechs. To give you an example of one of these 2, we joined recently a consortium of 14 banks and market infrastructure launched by SWIFT. We are the central bank in this consortium to conduct a new central bank digital currency experiment on interbank settlement purposes. The third experiment deals with the other use case I mentioned, which is tokenization of security. Here, unfortunately, I cannot yet give the names, but we will have an important European issuer. We will have 2 European central banks or national central banks within the Eurosystem. So there is a cross-border dimension and private players. And in this case, we have the 2 legs of the transaction. We have cash settlement and we have security settlement. This is where blockchain and the technology completely change the game. I am absolutely convinced that these 2 use cases I mentioned, including the tokenization of finance, will happen. So there will be wholesale CBDC without any doubt. Let us make it as practical, efficient, and interoperable as possible. Probably the retail CBDC question, as said, is a more sensitive question, draws more attention, and will be at the end a question of public choice. To say it this way, if I may, I'm convinced, I'm sure it will happen on the wholesale side, but it will be seen as technical. I would be ready to bet that it will happen on retail CBDC, but it will draw more public attention.
It'll take longer. It's a little bit more complicated and maybe a little bit more controversial. Well, last question.
If I may say one word about the calendar, referring to your last remark. In the case of the ECB, we launched this prototype or investigation phase. We will take stock of all what we learn and all the questions we study precisely in this investigation phase at the end of next year. So late 23 or early 24. And then if we decide to generalize after this experiment, it will take 3 additional years. So it would mean in our case, late 26, which is not that far away, but we'll see.
Yeah, it's coming. It's coming. So the last question I want to ask about is what kind of financial stability concerns do you feel like all this activity raises? The financial system is changing very rapidly. The rise of digital assets. How do you think a CBDC could, affect monetary policy or financial stability? And if you have concerns, what do you think we should do about it?
Let me take the global picture, perhaps not only CBDC, but also crypto assets and the tokenization of finance. And have perhaps a remark on the vocabulary, but which is for me very enlightening. You mentioned financial stability, and we speak about innovation. So in the conventional view, stability and innovation are completely opposed. think of the meaning of these two words. I don't think so in our case. I think that they converge in the long run. What do I mean? If we have stability without innovation, it's only conservatism. And then the role of finance will be less and less efficient for our fellow citizens or for firms. And if you have innovation without financial stability, it will miss a key dimension, which is trust. And in that case, innovation wouldn't last. It would be only, I refer to crypto winter, it would disappear because people don't trust this innovation. So I would say that in the long run, both of them should converge. And this is why it's so important to have regulation, as I mentioned earlier, and to make, for example, the difference in our regulation between crypto assets which are not backed to all, so unstable coins, so to say, and here there are clear dangers. I don't say we should forbid them, but if you look at investors' protection, nobody is responsible for their value. They probably will not be accepted as a general means of payment, so it's very speculative. And then you have the so-called stable coins, and we should be precise in the regulation. Are they really backed by 100% by stable assets, be it treasury or cash accounts or such things? And do you have a 100% redemption right? If so, but we should precise it in the regulation, these are probably really stable coins. You should apply other regulation about anti-money laundering, etc. But here, I would be ready to bet that they have a very promising future. If we have that, then we will have dealt with the financial stability issue you mentioned. If not, clearly, look at what happened in the crypto world some months ago with Luna, Terra, etc. By the way, fortunately, the amounts were still negligible. So it didn't have crisis, it didn't run to a crisis, it didn't have significant financial stability implications. But if these assets are, and these tokens are about to develop, and they will, for obvious technological reasons, and if they are not regulated, it would mean a huge and excessive financial stability risk. This is why I plead both for innovation and regulation.
So it sounds to me, just to sum up, that you're quite optimistic about the promise of the new technologies, but you feel like there's a lot of work to do on the regulatory side to get this sort of fit for purpose so that it can work well and integrate well with the traditional finance system. Is that fair?
No, Bill, I think it's a good sum up. I try not to oppose, as I said, stability and innovation. So to go beyond conventional vocabulary, so to say, I think this is the right way to do. Our role as central banks is not to oppose innovation. It would be really sad, is to give trust in the innovation, which is much more promising, but which needs regulation.
Yeah, trust is necessary, but it's obviously, it takes more work to put that into place. Well, thank you so much for your time today.
Please.
Thank you so much for your very insightful comments. We very much
Thank you very
appreciate it.
much, Bill, and have a nice day with the Bretton Woods Committee in Singapore.
Thank you.